How do I turn my side hustle into a business? First off, I'm not your lawyer, I'm not your CPA. I am just here providing factual information that you should follow up on and use other external resources other than me. Use me as one resource, not your only resource. Okay, we've got Sally here who starts a lemonade stand. It's a side hustle. She goes to school full time, and on the weekends and at nights, she sells lemonade for 50 cents. This is a side hustle. This is the definition of a side hustle. Now, she probably hasn't set up an legal entity yet. She's just started selling this on the sidewalk. Um, by definition, that makes her a sole proprietor. Okay. And any money that she receives is basically personal income, and she has to report that personal income on her taxes. Now, that's fine. Many people start as sole proprietors, but it gets messy. Okay, so now she's got a bank account. Where does she put the money? Um, if she has other income, let's say that she's got a babysitting job, um, and the lemonade business. How does she mingle those funds and separate them? How does she account for the costs of the lemonade versus the babysitting money? It all gets intermingled. How does she, if someone, because she's a kid, and this analogy doesn't work great, but follow me on this. How does she protect herself if someone trips and falls on the edge of her on her stand right there and hits their head and busts wide open, and they say, "I'm suing you for my hospital bills because I knocked my head on your very sharp edge right here." Sounds silly, but guess what? The United States is the most litigious country in the entire world. This happens every single day, and that's why lawyers are overrun everywhere in our society. So the first thing to do, if you're going to start taking money from someone as a customer, getting an entity is very smart. There are multiple types of entities. The most common for small businesses is an LLC. Okay, an LLC can be taxed as an S corp with the IRS. That's another video for another time, but you can get an LLC and then have it viewed as an S corp. Okay, so you don't need to get a corporation to be an S corp. Now, the LLC, if she gets this, acts as a shield between her personally and the business. So if she has Lemonade LLC, we're just going to say this is Lemonade LLC is the name of her business. If someone then, cuts themselves, they cannot sue her directly because the business owns this shack, this, banana stand, if you will. And so they have to sue the business. And so if Sally here personally owns a car and a house and jewelry and cash, this phantom person that just, wrecked shop on the corner of her stand on their head, they can't sue her personally. And so whatever income she makes from the business, that the business, if the business makes $1 million a year and then she gets paid profit $250,000, $250,000 personal net income, then that $250,000 is protected because of this transaction. That brings up a whole other thing about taking cash through the business and then having the business pay you. So if somebody here, let's make a little stick figure. We've got a little person here, and that person interacts directly with Sally. They say, "I want to have you do catering." And then they take their money and pay Sally directly. Sally is still operating as a sole proprietor. Okay. And even if she has the LLC, she still has Lemonade LLC. But if she is taking money directly from this individual, even if she's standing in her banana stand, lemonade stand, she has to realize that this is a personal sole proprietorship transaction. So if she wants to protect herself after the LLC is formed, she needs to have Stickman pay the business, write a check to Lemonade LLC. And then that Lemonade LLC money needs to go into the bank and then pay her personally. So let's add in all these little things here. So Sally starts an LLC. Okay, she starts out with her state. So I don't know what state that is, but it could be Texas, could be California, could be Idaho, could be Ohio, whatever. Then she goes to the IRS. Like once this is okay with the state, then she goes to the IRS, and the IRS says, okay, here's your EIN. This is your employer identification number, your FTIN, your federal tax identification number, your FEIN, tax ID, goes by many names. It's all the same thing. Then she's got the operating agreement, which says that she is the owner of the business. This is the only thing that proves that she is the owner of the business. It says the rules of the business, how she adds a second owner if she wants, how she sells the business, if there's a dispute between her and this new stick figure girl that's her friend, how they communicate to each other. Once all of these things are created, she then goes to the bank, opens a bank account. That way she's not taking money personally anymore into her personal checking account because, as we said earlier, it becomes this worm of stuff. If you've got you're buying lemons and sugar and cups and all this stuff on your personal card, at the end of the year when you've got to separate it, it just becomes a huge mess when you're filing your taxes. So you open a new business bank account, so you get a new debit card or check or credit card or whatever. And let's say this is the business bank account, okay? So when Sally collects money from Stick Figure Man, he pays the business. She deposits that into the business bank account, okay? Then when she wants to pay herself at the end of the week because, she put in hours, she, needs to pay herself, then the business bank account pays her directly, all right? That is how you present yourself as an LLC, and how you kind of convert a side business that is a sole proprietorship into a real business that is an LLC backed by the state, protecting yourself so Stick Figure Man can't sue you if he knocks his little stick figure head on little stick board there. So there you go. We've got Step 1, LLC. Step 2, EIN. Step 3, legal documents. Step 4, bank account. Then you're just running everything through these items, okay? You and the business are completely separate. They're different people. Lemonade LLC is its own person. Sally is her own person, and Sally works for Lemonade LLC. She can work as a contractor. She can work as an employee. But the money runs through the business, and then the business pays her. And that is how you go from being a sole proprietor, a side hustle, if you will, to a fully fledged business. Now, it's best if you become, if you're going to take your first dollar, it's best that you do that after you've set up all this stuff. And the reason why is because, if you're getting this started and you sell your very first cup of lemonade and Stick Figure Guy knocks his head on that very first transaction, you're a sole proprietor. And so he can sue you directly. That's why it's generally recommended that if you are going to start working with people and taking monetary fiscal transactions to get that done. If you're just setting everything up, you're just kind of proving the concept, you're buying the shack or you're building it and you're the only one building it, you're not having other people help you build it. All that you can do yourself. You can plan the business and stand it up without having to actually create the LLC. But if you know that you're going to then go the next step and become real by taking that first dollar, that's when it's probably best to become a separate entity. Now, to follow up on that, there's so many more things that you can expand on beyond that. There's, how are you going to do payment processing? How are you going to do a website? Bookkeeping, accounting, all of that stuff figure that out later. My biggest suggestion to people is just get started. So all of this looks very complex. I get it. But there are millions of people that run this stuff every day that are no smarter than you. So just get started. Set up the lemonade stand. Maybe sell your first lemonade as a sole proprietor if it works for you and you're not sure it's going to work. Prove out the concept. But the second that there's risk involved where you might get sued or the business is becoming real and you're starting to take a lot of cash, there's a lot of benefits to having a real legal entity like an LLC or corporation. And so you can get those from us at Better Legal. Hopefully you found this video helpful. And if you have, like, share, subscribe. We have many more videos about all kinds of different subjects. If you have questions, please ask below or via chat at betterlegal.com. And I will see you on the next video.